Well, gold actually rallied pretty well in the last couple of months, and so we have to be careful about getting, overly bullish. We remain bullish on the metal, partly due to the fact that the dollar is trading sideways, and the great help that we've had from the Fed, because bringing real yields down, and with inflation where it is, real yields have really fallen, and typically gold moves in the opposite direction from real yields. That means yields after inflation. So I think that with a very dovish Fed, that's
why is the
positive.
upside limited? Because if you look at the history on gold prices, 5-year, 10-year, the peak is really 1600 and beyond, closer to 1900 in fact. So there is upside if you're looking at an environment largely subdued economically, and these challenges playing out. People would want that safety bet.
Yes, I mean, that's why we keep that generally positive view. And I think the tensions in the Middle East are also a contributing factor to the positive view on gold. But I think one has to be just a bit careful in terms of the amount of the rally. Gold, there are lots of positions which have reversed in the gold market. We started the year when people started to sell, and that's why gold took a little bit more difficulty in taking off. But now we've started this rally. So I do think it goes up, but I do think when it's a moderately higher call.
Rajeev, you've talked about the geopolitical situation in the Middle East a couple of times. You've pointed to that. How, I suppose, far ahead are you looking in terms of geopolitics? Because obviously, we've been watching the oil market specifically when it comes to the impact and the influence of what's going on in the Middle East right now. I mean, are you concerned that there is the real risk of some kind of misstep, I suppose, when it comes to conversations that are being had and the actions that we're seeing out in the Middle East, in particular when it comes to Iran? What do you think is priced into the market already?
Well, the tensions are ratcheting up slowly, so I think one has to keep a close eye on what's going on. As you implied, there could be some accident at any time, and none of the patterns really look very promising. Now, the markets are not focusing too much on what's going on in the Middle East, because very often the impacts have been limited. I also think that the Trump administration doesn't want to see a full-scale conflict in the Middle East, so they'll be a bit more careful. But it isn't healthy to see a ratcheting up of tensions, and it always opens a possibility for an escalation due to an accident.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.